Welcome to the Industry Experts Panel at PortfolioWealthGlobal.com. My name is Michelle Holliday. Today we are welcoming the great Mr. Bill Holter. Bill is partners with Jim Sinclair in a newly formed Holter-Sinclair collaboration. Bill worked as a stockbroker on the stock market for 23 years. He left Wall Street in 2006 to avoid the potential liabilities of paper assets. Bill is a well-known contributor to the Gold Antitrust Action Committee. As we are recording this interview, gold is sitting right now at over $1,300 and knocking on the door of $1,360. Portfolio Wealth Global's #1 gold stock, First Mining Gold, was second biggest gainer on the Toronto Stock Exchange on Monday, gaining 16%. Tom Beck, our founder at Portfolio Wealth Global, sees this company in particular as a strategic holding. And to keep our audience up to date on everything, your free downloadable report for everyone is at portfoliowealthglobal.com/mineral. It is a complete overview of this company. Today, of course, we are welcoming Mr. Bill Holter to see why he sees a system reset and a huge meltdown coming. Bill, welcome to the show. How are you today?
Good. Thanks for having me, Michelle.
Oh, we are thrilled to have you here. Bill, to start off with, could you please tell us a little bit about your own background and how you have come to the perspective of your worldview of where we are right now in our overall financial landscape?
I guess you could say it really started with the very first page I read in college was an economics course that said, we don't know why the Great Depression happened, but we do know it can never happen again. And that pretty much launched me on a search for why did it happen, and the more I dug into it, then I realized the significance of going off the gold standard in 1971, and the further I dug, the further I understood that the system is built on debt. It's no longer built on real money. There's no foundation under the financial system. So digging for the truth, I ended up finding true money, gold.
Right, precious metals and silvers. Now, Bill, why do you believe that the stock market will crash?
Well, again, as I just mentioned, everything is built on credit, and there's too much credit. There's more credit in total volume terms than ever before. There's more credit on any ratio you look at than ever before. The world now has, 327 trillion of debt total, and that's over 3 times global GDP. And once you cross over, say, 125%, you're in banana republic land. So basically, the world is a banana republic.
Wow, very scary. Now, Bill, how low do you think that it can go?
The stock market? Mm-hmm. In the U.S., I think you're probably going to see a 40 to 50% drop in the market. If we were looking at the stock market in terms of gold, I think you could see a 80, 90, 95% drop. But in terms of dollars, because dollars are going to inflate along with other fiat currencies, you won't see as big of a drop on a percentage basis because the currencies themselves will drop. And that's why in past hyperinflations, you'll see a stock market drop 30, 40, 50%, and then all of a sudden start going higher, even though you know the country is bankrupt. And the reason for that is because you're comparing it in their currency terms.
Interesting. So the calculations can get a little bit complicated there.
Right. If you're looking at it in dollars or euros or yen or whatever, you're measuring it with a flexible yardstick. Whereas with an ounce of gold, it's a yardstick that can't move. An ounce is an ounce is an ounce.
You've got what you've got. Exactly. Yeah. Now, Bill, going back to the stock market, just touching on it, what's your estimated timeline on this? What would you predict as far as where do we sit right now? How far away is that?
I answer this every time. It should have happened 2 years or more ago.
Wow.
I mean, you could wake up. I've said the way I think this is going to go down is that you're going to go to bed on a Friday night, come home from work, go to bed on Friday night, and wake up Monday morning, and the world will have changed.
that fast?
Well, yeah, I think because there's so much credit in the system, and we saw this in 2008 when the markets were unsettled. We saw the Lehman weekend, and it was touch and go within an hour or 2 hours as to whether or not they could save the system and get markets open on Monday.
Wow.
And so much in the way of debt, as I mentioned, 327 trillion in debt, and then add on top of that, there's 1.4 quadrillion in derivatives. There's more debt in the world than there is the world.
Right.
It can't be paid back in current dollars, euros, yen, etc. They're going to have to print. If they're going to actually pay back and not default, they have to print.
Wow. So you literally could see this happening like over this weekend. That's how close we are. It could be this weekend. It could be 2 years from now. We just don't know what's...
Right. But I do believe it's going to be a weekend event. I do believe something will be snapping in the markets 1 week, and then over the weekend they can't fix it and they don't get markets open. Or they'll get markets open and they close. I mean, we saw this in 2015. The Chinese market was closed for a couple days. The U.S. market closed down during the middle of a day. That's what I think you're going to see is some false starts, whereas they try to get markets open and they realize they can't do it.
And most people don't even realize what was going on during those times. It was sort of a mystery thing. You know, we've had, I think, technological difficulties. Was that?
Yeah. Well, Jim has said the best way to close a market is just to pull the plug. And I think that's what they probably did in 2015. And I might also add that when these markets close, you're not going to be able to buy gold and silver. So if you don't have your gold and silver, it's not going to be available. And people who think they own gold and think they own silver in pooled accounts or ETFs or what have you, those people are going to find out they do not own gold or silver.
Because they're paper assets.
Right, exactly. Because just because somebody says, oh yeah, we have the gold or we have the silver, doesn't mean it's there, and it's not there. I mean, just look at how much gold and silver COMEX just in the last 4 months has sent for delivery to London via EFP contracts. More than 100% of global production in 4 months, just from the COMEX to London. And it does not exist in London. Those people are not going to get their gold and they're not going to get their silver.
Oh, wow. It just exists on paper.
Exactly.
And who are you going to go to?
Well, and the bottom line is
it's
all about promises. Gold is promised, silver is promised, pensions are promised. All these promises that exist cannot perform. And what is the value of a contract that cannot perform? Zero.
Wow. Less than zero if you put all your money into it, right? You're just stuck. Now, Bill, turning just slightly into cryptocurrencies, is that a sophisticated way to shelter fiat currencies, or do you only trust the physical precious metals like silver and gold?
Well, I've said from the very beginning is I believe that the current cryptocurrencies are a test, and they're a test for central banks to come out with their own cryptocurrencies. And cryptocurrencies are great from the standpoint of a government that wants to know everything that you do, so that if they can track every single transaction that you do. And I think that the current cryptocurrencies, there may be, none of them may exist. I don't know. But I view it as digital air. There's too many things that can go wrong. And an ounce of gold or an ounce of silver in my hand, there's no promise. It has value because it is. I'm not relying on someone else to perform in order for me to have that value.
Now, you know, Bill, Portfolio Wealth Global's analysts have published a number of exclusive PDF reports on our website depicting the coming crisis with bonds. And you brought up bonds a moment ago. The report includes how to switch your bond portfolio into high-yield investments for retirement. Do you currently hold any bonds?
No.
No.
Bonds are I forget who said this, but they are certificates of guaranteed confiscation.
Oh, wow.
And did you say that they're recommending to move into high yield bonds?
High yield investments out of bonds into
Yeah.
high yield investments, alternatives.
Well, if you're talking about moving out of sovereign debt into high yield investments, you might as well, when you use the term high yield, you got to use the term high risk. And I think I don't agree with that at all.
What would you suggest for people that hold bonds right now? I know the answer, but
Well, if you any bond, the longer the maturity is going to have higher risk as rates go higher. Now, assuming we're not talking about corporate bonds or high yield bonds that can actually default because they can't print the money, I think you're going to see massive defaults in the bond arena. You do, with interest rates going higher, and I do think rates are going to go much, much higher than they are right now, and the bubbles will be popped as all past bubbles have been popped by higher interest rates. You want to shorten, if you have to have bonds, you want the shortest maturity possible. You don't want to go out more than 30 or 90 days.
Oh, I see. So switching your bond, if it is long term.
Yeah, you want to shorten your maturity. You don't want to lengthen your maturity. I mean, think about it. Go back just 6 months or a year ago, and a 10-year treasury was what, 1.7, 1.8%. It crossed 3% yesterday. So if you had your money in 10-year treasuries, you're down 10, 15, 20% just on the principal. And if they're 30-year treasuries, I should say 10 to 20% on 30-year treasuries, and 10 years are probably down 5 or 10%. But the bottom line is you don't want to lock a loan in, because that's what bonds are. You're loaning money. Why would you want to loan money for 10 or 30 years at 2%? That's foolish. You know, inflation is going to be over. Inflation's already well over 2%. So you're losing purchasing power every year.
You're losing money. Now, Bill, Keith Neumeyer, the founder of First Mining Gold, just appeared on the SGT report, and he spoke at length about gold price manipulation and JP Morgan's huge physical position in silver. What are your thoughts on price suppression schemes?
Oh, I've talked about this for years. I mean, it's been going on since I first identified it years and years ago in 1996, 1997 with the late Harry Bingham. We would see what was going on and we're like, no way, this is not possible. This news couldn't come out and gold go down. And over the years, we've found out that there's 300, 400, 500 ounces of silver, paper, gold that have been sold for every 1 real ounce in existence.
Wow.
So the price over the years has been diluted.
That's
And people should go to the GATA, GATA website, and they have reams and reams of proof and anecdotal evidence that this is in fact what has been happening for many, many years.
It's beyond criminal, because you just imagine all these people working all these years and putting their life savings into gold. Right. I've got gold. I hold gold. No, you don't.
Well, it's criminal because what about the average person who puts their money into the bank or treasury bonds or into whatever, and when this reset happens, people are going to find out, hey, I worked and saved. Somebody who's 65 years old and retires, and let's say it happens the next day. I worked and saved for 40 plus years, and what do I have? Nothing. And people are going to wake up to that.
Now, do you believe that people that have their money in the bank will actually have a what they call a haircut, a cut in the funds, or do you think it's just the purchasing power that will?
Well, there's actually legislation for bail-ins. That's the term you were looking for. Rather than bailouts, the FDIC, Canada, Europe, it's all over the world. The legislation is set up for bail-ins, and that's customers losing dollars, euros, yen, whatever, to save the bank. And then on top of that, you're going to have, like you said, the haircut of fiat currencies dropping in purchasing power.
So it's a combined. So if I have $100,000 in the bank, I could wake up and they could legally take half of it, 50,000, and not only that, that 50,000 won't buy
the legislation I think calls for whatever the limit is now. I think it's 250,000 is what they had raised it. Anything over 250,000 can be bailed in. And it's not going to surprise me to see that that there is no minimum or floor for the bail-in. It'll be like the Greek banks, where people that had $70,000 lost a percentage of that. So I think it's going to be everyone, and I think they have to do that because the promise is outstanding, and the way these banks are in bed with each other in derivatives, the derivatives are going to blow the bank balance sheets up, and they're going to have to be refunded somehow.
So they know it's coming. They lost money on the derivatives, and they already have the law on the books that the people are now going to pay for it instead of the government.
Right. That came around, I want to say 2015, maybe 3 years ago, is when the various banking systems put legislation on the books to make it legal to bail in rather than bail out.
I didn't get that email. I got an email that my fee's going out, but I didn't get the email that they could take all my money. Okay. Now, Bill, from your perspective, is President Trump leading us into a war? And if so, is it a physical war or would it be a capital war?
That's a really tough one. You got to hope that he's not. You don't know what's going on behind the scenes. You don't know. One day there's going to be trade tariffs. The next day there's not going to be trade tariffs. It's really hard to say what's going on behind the scenes, but just on the surface of it, yeah, it does look like war is likely. And especially trade wars and currency wars, history has shown turn into hot wars.
Wow. But you're right, behind the scenes, he seems to be someone that, how should we say, has a plan. You know what I mean? Which I hope to God he does, which
So do I. I hope he and Putin are playing 3D chess and are viewing what they do, how it affects humanity.
Right. Which I sense could be an option. That could be happening. Now, Bill, do you believe that we are going to be facing hyperinflation at some point?
Yeah, I think it's a mathematical certainty because, as I said, there's so much debt. There are so many promises outstanding. There's more debt in the world than there is the world. So how do you pay the debt? The money doesn't exist to pay the debt off. The only way to pay the debt off is to create the money. And if you create the money, you're diluting the current value. Which
we've been doing for
and we can't. There's been an argument for years that, we're going to go into deflation and the dollar's going to rule the planet. That's not possible because the dollar is backed by nothing. That was possible in the 1930s because the dollar and gold were interchangeable. There's no currency on the planet now that's backed by the dollar, by gold, and there's no currency on the planet that's really backed by anything. So hyperinflation is pretty much mathematically guaranteed.
Wow. Now, Bill, turning now to the topic of millennials, what are the top 3 actions you would suggest to millennials today? In other words, if you were just starting out, what would you be doing?
The The top three things I would do, first off, this stuff with safe rooms and political correctness, just grow up, suck it up, become, a normal human being. From a financial standpoint, try to get yourself out of debt. That's the first and foremost. And from an investing standpoint, I would say stack silver, stack gold if you have the money to do it, because you're picking up dimes, nickels, and pennies off the street that are dollars. You can end up with multiples of what you're stacking.
Wow, interesting. Now, Bill, what would you suggest in your with your vast history? You've had such an esteemed and amazing career. You know so many people. As far as your outlook on life, I want to ask you a general question. What is your outlook that has led you into the position that you're in and that you're able to have the associations that you have? What suggestions could you give to our audience?
I just say, I've just always dug for the truth. And I worked for 23 years as a broker, 12 as a branch manager, did all my business on a handshake, and never had one arbitration, never had a lawsuit, never had a settlement. And the bottom line is your word is your bond. And if you keep your word and you do business with people that keep their word, then you have a good group of people that you can do business with.
It has been amazing to have you on your show. Now, how can everyone follow your work, Bill?
You can go to www.jsmindset.com.
Wonderful. Thank you so much for taking the time to come on with us today.
Thanks for having me.
Mr. Bill Holter, stockbroker, writer, expert in holding precious metals. For the Industry Experts Panel, I'm Michelle Holliday at PortfolioWealthGlobal.com.